Take the first step towards online privacy. Get NordVPN.
Now, if you want to preserve your security and your privacy, go check out the Apollo wallet, which I think is the most secure wallet going. Use my affiliate link for a discount. Hi, everybody. This is Crypto Rich, working with you to get rich with crypto. And this video will be about crypto, at least the first part. I'm joined by Tom Luongo, extraordinary commentator and macro analyst of geopolitics and macroeconomics. And in the second part of the video, which will be over on Odyssey, we're going to talk about all sorts of spicy subjects that YouTube doesn't necessarily appreciate. Hey, Tom, how you doing?
I'm good, Rich. How are you?
I'm very, very well. Very, very well. And we do these regularly, and thank you so much. I so appreciate it. And the links to your, tomluongo.me, your website, which has links to your podcasts, and also people can go and sign up and become a patron and get exclusive inside information and exclusive inside spiciness as well, which
There's that too.
There is that too. Okay. So look,
so FYI, just so people know, I hate to say this, but if your video is unlisted on YouTube, you can say whatever you want.
Oh,
yeah.
Can you even
stuff that I regularly get copyright? I get old copyright strike. I get old strikes on now, on like old live streams. I say on the unlisted stuff, they don't care.
Oh.
It's only listed videos they care about. It's only publicly available videos they care about. It's not a blanket, we don't want this content on our platform. It's we don't want you to hear this content from our platform. It's a big difference.
Because they're looking after us, which is very kind.
At least as far as I can tell, because I mean, you've heard the market reports.
Yeah.
You know what happens. You know, I make no bones about certain verboten topics, and I use the German for a reason. And they never get struck down. And I don't, they haven't struck one down yet that I would have to go open a Vimeo account to, provide for my patrons, because I could go spend $20 and get a Vimeo account and post everything there, and whatnot, or a Rumble account or whatever. It doesn't really matter. I still just use YouTube because it's what I have, and
Because I recently got a strike on my YouTube channel, one of my YouTube channels, Crypto Rich BTC, because I referred to a competition that happened in November 2020 in the United States. And I just questioned the outcome of that competition.
Oh, right. That competition. Yeah. That was the Super Bowl, right?
It was something. But it
was something that happened, and I'm not really sure. Yeah. I'm not really sure. Yeah. A little weird. Okay.
So that video
was the right. It was the Gainesville city elections. That's what it was. Got it.
That was it. And there's a lot of controversy about that. But anyway, there was a
little bit of controversy here as well. So.
That video is on Odyssey, and I do invite people to go and sign up, bit.ly/CryptoRichOdyssey. I post more stuff there. Just an email sign up, no KYC, nothing like that, and lots of censorship-resistant material on Odyssey anyway. All right, now we're going to start by having a look at the Bitcoin price charts. So do you want to share your screen?
Sure. Let me figure out how to do this. Oh, there it is, the big green button, that one.
We're recording this
and sharing.
On the 2nd of April at 1 o'clock in the afternoon UK time. Okay.
Right. Okay. So here's the weekly chart of Bitcoin.
No spam, Tom. I remember the last time you were just rude about all my spam, all the indicators that I use.
You'll note for those of you who've never seen me do technical analysis before, you'll notice there's nothing on the chart.
Yeah.
Right. You'll notice there's no lines, there's no Fibonacci series. And by the way, I know all this stuff. Bollinger Bands, Fibonacci series, Hydromotion Clouds. I've done it all, and I consider all of it. Well, it's nice if you like it, but it's not necessary. I was taught by a quantitative trader after years of failing with all the kind of classic technical analysis tools of being able to predict anything. And we wrote a book together. I've been using this system ever since. It works amazingly well because at some point you can just quantify what your pot odds are based on where you are with a couple of very simple rules. The first thing to do is strip all extraneous information off of your chart, so you have a nice, clean, simple, elegant desktop. It's like Jordan Peterson's first rule for life, right? Clean your room, right? And the same thing is here. Is that too much information is actually not a good thing. It actually winds up being its own form of confirmation bias. And the process is called reification. And look it up on Wikipedia, and you'll understand exactly what I'm talking about, which is that we are pattern recognition monkeys.
Yeah.
Like we're really good at pattern recognition. And that's what our left brain does in order to assess threats and all the rest of it. But this is a philosophical rant before we get into what's going on. And it's important to understand that when you draw lines on charts, you create like pictures and models, and is this a cup and handle, or is it a falling wedge, or is it this, or is that? All of that stuff is actually just your brain going crazy. You're going, oh, I found a pattern. but does that pattern mean anything?
Mm.
And the problem with it is that it becomes its own self-reinforcing kind of tautology, okay? And it's the process of imputing, reification is the process of imputing meaning into a pattern that you recognize that has no necessarily correlation or causality to the things that's under discussion. It is part of the reason why in statistics we say correlation does not necessarily imply causality. Well, reification is kind of the optical illusion version of that. Okay,
Right.
so seriously, actually the Wikipedia article on reification is actually very good. I can vouch for it because I've linked to it many times. They don't care about it, so it's not politically interesting. So they don't. So it actually conveys information. It's amazing what happens. Okay, so with that said, I just look at the bars. I just look at the relationship to the bars, and I look at the relationship to the candles, and I let them tell me the story. So where we are right here. Now this is Bitcoin's investing.com's Bitcoin index. So it's their statistical algorithm of whatever they think the Bitcoin price is in any one moment in time. I just use it as a consistent cross exchange, average price for Bitcoin. I don't know if it's accurate, but it doesn't matter. As long as you use a self-consistent data set, then the rules work. So we've had a really nice rally off of 16,000 down in here, where we had this unnaturally, disturbingly low volatility period for about 2 months, and then we had a breakout, and then and that established an uptrend. There was a reversal signal here, which is defined by after a directional move, we had a move against it, and you check, and the check for this is very simple. You just check the close versus the last, well, in this case, low, because it's an uptrend of that trend. So we have an uptrend here. You check for a close below the last low in the uptrend within 2 bars. So it happened within 1 bar. So this is a 1 bar reversal signal. 1 bar reversals are very powerful. They tend to continue the trend, that the reversal of the trend, like 85% of the time. This has been back tested, going back looking at everything 50 years. 2 bar reversals are about 65%. So this is your tradable, quantifiable edge. But then look at what happened here. We barely broke the low. Yeah, just barely broke the low from the previous week, engulfing the previous week, and then going higher, breaking both the previous high and the previous low. This is a reversal signal. So what we have here is kind of back-to-back reversals. Why is that important? Because the last reversal signal is the one that's dominant, because this one's been negated. So this reversal signal it negates this uptrend. And then this reversal signal negates this reversal signal, meaning it continues the uptrend. And then we get this. And as I said before, 1 bar reversals tend to continue 85% of the time. 2 bar reversals about 65% of the time. And 3 bar reversals, it takes 3 bars to close below the low that you're looking at. Well, they're coin flips. So they confer no net advantage to you in a trading sense. 50% of the time they could go up, 50% of the time they could go down, right? They could continue the trend or they could reverse the trend. And look what happened here. And the reason for that is because it takes a lot of energy in terms of investor sentiment to push the price down below this low. Like, these highs and these lows are emotional highs and lows of the market. That's why highs and lows are important. Okay. In Bitcoin, closes are arbitrary because it trades 24/7. They're more significant in markets like the Dow, which closes on Friday and doesn't reopen until Monday, right? And there's a 72-hour period where people have to live with their positions, and the world could change against them. But in Bitcoin, closes are kind of arbitrary, just to kind of close out a time period. So this reversal, or this 3-bar downtrend, is a weak downtrend. So it's not surprising that it gets reversed immediately, because here we are, 3-bar downtrend closing above the high of this downtrend is a reversal, and then we're off to the races. But now look where we are today. And all that was to tell you, oh, look, this uptrend in Bitcoin, which has been structurally kind of nice, has been, tenuous at times. We had a reversal here, we had a 3-bar downtrend here, and then here we are at the end of a 3-stage rally. And generally speaking, the 3rd stage of a rally is usually the weakest, because again, bulls are getting less and less committed as they go up, because, hey, we've moved off of 16,000, now we're at 30. A lot of people just got into this for the trend move. You're going to lose the momentum traders. You're going to lose the swing traders. You're going to lose the day traders, right? And only the long-term hodlers are going to be in here. And once that happens, the supply of sellers overwhelms the supply of buyers, and the price reverses. And so now that you understand the basics of market psychology, now you understand why you don't need Bollinger Bands. Now you understand why you don't need Ichimoku clouds or anything else. You understand this is the high. This is where a high is where the supply of sellers overwhelms the supply of buyers, and a low is where the supply of buyers overwhelms the supply of sellers. Is that supply strong enough to, one, first arrest the downtrend, and then is it strong enough to reverse it? And to reverse it, why it's important, why the high is important in this case, is because this is where the shorts would naturally set up, the contrarians would naturally set up, because that's the last time the market reversed, right? That's the last time the supply of buyers and sellers was out of balance. And so the shorts will naturally set up on a high, or the bulls will naturally set up on a previous low. And so when you break those, that's when you get broken field running, to use a football analogy, or you get the big directional moves. So what happened here, right? This tells you that there was no liquidity in the market, and the shorts set up here, and then they had to flip and go long in order to cover their ass because they were in a wrong position because the buying overwhelmed them quickly, and that's why we got this big bar. That's why we got this big bar. That's why we got this big bar. But in the reverse, the bulls were wrong, the bears were right, and we got a collapse. Okay, and no argument that every once in a while, there are malign actors in the market pushing these markets to extremes, but that's also to your advantage as well. Okay, so market sentiment here, this isn't good for right now in Bitcoin. That's not to say that Bitcoin's going to re-enter a bear market and go back to 16,000. No, we've broken this low. This bar will close as of tonight at midnight, I think Greenwich Mean Time. And so if it closes here, then Bitcoin will have thrown a 1-bar weekly bearish reversal. Okay, and it means that this uptrend is likely to have been arrested. Now you start asking yourself, okay, well, where will it correct to? Well, that low is interesting. These lows are interesting. So here's 25. Oh, look, there's a couple of lows going all the way back to here, or highs here, right? Because they're going to go back to, where the bulls are going to go back to where they, where they made money. They're going to look at the chart and they're going to horizontally look, oh, look, there's support there. Because a lot of people were interested in that price. So what is that, around 25.3? So that whole 25 to 25.3 area. If this close holds through today, I will not be surprised if Bitcoin corrects back into the 25s or even the high 24s. That would actually be very healthy after a big 90% gain here, almost 100, almost double, right? From 16 grand to about 31 grand. Like, you want to pull back and rebalance the market. It's healthy to allow the shorts to think that they're in control, because then you can beat their ass later. And that's the way you have to start thinking about this. This is all just a big bar fight between people who are bullish and bearish, right? And it's not and it has very little to do, to be honest with you, especially at the weekly level, very little to do with any kind of macro thesis that you can Bitcoin fixes this, or this is a safe haven trade, or blah. None of that shit matters. You got to go out to the monthly or quarterly chart to make that kind of conclusion, because you've got to aggregate more information about what longer term investors are thinking, because long term investors, hodlers, should only be looking at monthly and quarterly charts. They shouldn't even look at weekly charts. Okay, unless you're thinking about swing trading some of your position in order to accumulate. So if you're a hodler and you want to, you have some Bitcoin and you want more Bitcoin, well, the way to do that is to take it from somebody else who made a mistake in the market. And so what I would do is I would sell here on the close at 27, wait to set up at 25 or 20, around 25, and make an 8% accumulative trade. You'll have, sold at 27, bought back at 25. That's a $2,000 play over a sell price of 27. That's about what? 6%, something like that. Now you can accumulate 6% of your Bitcoin. Not that I would sell your entire position here either. You sell 1/3 into strength, you pick up a little bit, and you move on. And you go, oh, cool, I picked up an extra 1% Bitcoin, and I get to add it to my stash. That's and that's the way you have to look at this stuff. But if you just want to hodl and you're not sure if you should buy now or not, you don't care about any of the swing trading nonsense, when you look at it and you go, well, on the monthly chart, well, we had this big, ugly downtrend here. Big, what I would like to call boner bar, right? This is just a big boner going, hey, we're going along now. Because this is a massive reversal signal. Now, if you're a hodler, the weekly chart would have fine-tuned your buy point by a couple of weeks, right? Like, I was looking for, and then you can use it for a timing signal. I would have, if I was buying Bitcoin, I would have bought on the breakout above the high from this range, and I would have bought right here, right about 18.4 or whatever, and then I would just let it ride. This is what I do when I buy gold coins. I wait for something like this to happen in gold, and then I just go, hey, that's cool. I'll go to AppMex. It's time to buy a couple of grand worth of gold, stick it in my stash, and walk away. And I do the same thing with Bitcoin every once in a while as well. So what I would say here is that, we have a nice, beautiful 3-bar uptrend. This April bar in the monthly chart is showing that any reversal that we see this week has shown no technical damage at the monthly level, meaning the uptrend is firmly intact because we're in no fear of breaking the low from March to throw the reversal signal. So the trend is still active. So therefore, you just keep letting it ride. You wait. Now, as you go up and as volatility decreases and the size, the range of the bar, the size of the bars gets smaller, the probabilities rise dramatically that a reversal signal can happen because you're only having to reverse a very small range. And so watch for a breaking off, a cresting action in Bitcoin this summer, meaning it pops down to 27, maybe pops down to 25, and then goes higher, but only makes it back to 32 or 33. And then, if it breaks off towards, like 30, these lows in here are in the 34 to 30, 33 to 35 range. And then, because this is what I'm looking at as overhead resistance now in this area, like 30, right there at 35, where those lows are, right? Then you say, okay, well, cool. Then that's probably going to be the end of this big, long monthly wave. And then there's going to be a 3 to 6 month down trend. And then you'll look to see where it's going to correct, and then you go higher. And this is what Elliott wave theory the Elliott wavers try to model this kind of thing. And I just think Elliott wave, I think you can do everything in Elliott wave quantitatively with the way I approach all this. And you get better numbers because you can then calculate the probability each month of, are you going to break the previous high or the previous low? What's the average range month to month, week to week? You have numbers that circumscribe the thing you're trying to invest in. And it gives you so what's the normal 1 sigma, 1 standard deviation behavior of this thing that I'm looking at? Bitcoin, the 210 spread and the treasury yield, the euro, whatever it is. It can be freaking cattle futures for all of it. The rules are exactly the same. And then you can back test and backfit your data to figure out where you are and, make one spreadsheet of this. You can clone it 100 times and look at anything. This is what I do. I have a folder full of spreadsheets doing this stuff. So to me, Bitcoin looks like it's taking a nice, well-deserved short-term breather. TLDR, well-deserved long-term breather or medium-term breather, but no damage in the longer term. None. Right. Until we get to the end of the month, and then we see where we are. If it drops into the 24s, then things start to get interesting. For a March setup, that could be bad, or for a May setup, that could be bad. But generally speaking, right now, there's no damage at all. So I'll stop sharing. I'll shut up. And if you want to do it, Rich, you can give me your thoughts.
No, I think that's great. I think it's really, really great. I think just to summarize what you're saying, in terms of price action, we're looking likely to move downwards to 25 or the upper range of 24,000. And then we can look and see. And that would be a healthy correction. Okay. Now do you want to look at gold and silver, or shall we move on?
I can look at, I've already got gold. I can
have a quick look at gold then.
All right. So looking at gold.
Now, if you want to catch the rest of this video, you're going to have to go over to Odyssey, where we continue this conversation. Link in the description below.